What is up, traders? Hello, good morning. We're back in the studio today, and I hope everyone's doing well. Twitter just came back on for me. That was the highlight of my morning. I was trying to get on Twitter, and it was down, but now it's back. So that's pretty interesting. But what we're going to be talking about today is more than just Twitter. We have bank earnings kicking off. We've got inflation numbers again. The PPI came out this morning, which was interesting. And we can talk about CPI and PPI because yesterday was CPI day, today's PPI day. And surprise, surprise, inflation came out yet again, not transitory, not topping out, and overly extended, I would say. But let's talk about the second quarter earnings. We officially kick it off. It's underway. Investors prepare for a lot of results here. We had JP Morgan, Morgan Stanley this morning. And from what I do remember, why'd this log me out? You gotta be kidding me. Let me just make sure if YouTube's okay here. Chat disconnected. What's going on today? What the hell is going on? I'm just checking a few things here. So JP Morgan and Morgan Stanley, or yeah, JP Morgan and Morgan Stanley both reported earnings this morning as I try to get back into this. And they both gapped down realistically. They dropped off a decent bit. I'm just trying to find the earnings here. Morgan Stanley earnings per share, $1.39, adjusted earnings, 1.44, estimated at 1.57. So a miss there. Net revenue, we had an estimated 13.33 billion, and we got 13.1 billion. Naturally, with inflation and these rate hikes, we're probably going to see that banks aren't going to do so hot. We had mortgage rates that are at like 30, 40-year highs right now. So people aren't applying for mortgages. There's no mortgage applications really going on right now. There's just realistically less revenue in banks, and it's going to continue this way, and there's going to be more of that as long as these rates are higher, right? People don't want to be taking loans at these ridiculous rate prices. We also have JP Morgan's earnings. Again, JP Morgan took it, well, it's gapping down fairly aggressively. Banks aren't going to do so hot in the coming year as well, but earnings per share is 2.76 versus 2.883. So again, miss on the earnings. Adjusted revenue 31.63 billion versus the 31.97 billion. So a slight miss in that as well. But one of the main things here is we're opening up the door for the earnings season. We're going to start with banks naturally, and we have other things to consider as well. So realistically, these banks releasing their Q2 results before the bell. In the background, we still have this bear market going on that's constantly growing louder and louder. And realistically, when we see these downside moves in financials, we see earnings that are slowing in terms of growth for and future forecasts for tech. It's not looking like we're coming into that bottoming period, right? It's just something that's actually just getting started. Because if future earnings are projected for example, next quarter, next year, especially in the tech sector where there's already supply chain issues and inflation issues, then you're not going to see that bottoming out, for example, in the market for some time. So, in terms of financial picture, we should keep an eye on investment bank revenues as well. There's a lot of uh, slower merger and acquisitions and underwriting, as well as reduced earnings per share estimates from declining capital markets activity. That's one thing. And then into the end of the month, we also have a lot of the big tech names that are going to be reporting earnings, and those are going to be the main ones to watch because we've already seen forward guidance drop off in Microsoft and a few of those mega cap techs. So we'll see how that shapes up. We also have PPI that came out this morning. Let me find these numbers. They're scattered everywhere. The actual year-over-year PPI, we were expecting 10.7%. The actual number comes out 11.3% on the PPI, which is a lot, right? Jobs numbers also came out this morning. Initial jobless claims, sorry, not the jobs, not on the NFP, but initial jobless claims came out 244,000, forecasted 235,000, previous 235. So that's a slowing in terms of the labor economy there as well from that larger number. And the PPI, right? PPI is one of the leaders that leads the core CPI numbers. So with both these back-to-back terrible throughout this week, there isn't um or topping of inflation that we were expecting to see this month. A lot of people are saying that this is going to be the highest print of inflation that we're going to see. Uh, we'll see. That's what we've been saying for the past few months. But the Federal Reserve, right? They're still. I think they're still biting the bullet for that transitory comment that had been laid out a few months ago, if you will, and now they're talking about a softer landing, right? Softer landings, just like transitory, quickly become something else. So we'll see how that shapes up. The consumer price index surged yesterday. We saw 9.1% in June, making it the fastest pace in 4 decades and rising more than everyone's expectations realistically. So, central bank is not the only one in the spotlight. We also saw Biden telling reporters last December when inflation was at 6.8% that the peak of the crisis was there, right? And you'll see a change sooner than later, right? More rapidly, we'll take we'll take that turning point, which now we're what almost 3% higher. So again, we'll see. Now, the thing here is, um, with that large inflation figure. We also have to look at the Fed's beige book, right? Which is a summary of the current market conditions. And this was also pushed out on Wednesday, but it didn't provide a better picture on the economic backdrop. There were several central banks, 12 regional districts reported growing signs of a slowdown in demand, and 5 districts recorded an increase, risk of recession, right? And the remaining 4, they saw economic growth that either slowed or declined. So that could translate into a hard landing, if you will. There's nothing soft about that landing. And we also saw with the 2 and 10 year yield, geez, they steepened yesterday nearly 12.4 basis in a 12.4 base point gap. So this is the lowest reading in the 2 and 10 year since or divergent reading since 2000, I believe, right? Which spells recession realistically. The other thing is we also have rate hikes on the horizon. We talked about this yesterday, and yesterday at one point, when I was doing the update in the morning, we were at 30% only 30% probability of a quadruple rate hike, which is 100 basis points. At some point in the afternoon, there was an announcement. We were at, I think it was like 67% chance of a 4x hike. So I wanna oh geez, I went to the wrong website. I wanna see what that probability is right now. I don't know what's going on. We have YouTube, we have Twitter, everything is just like falling apart. No chat is enabled here on YouTube. Twitter was down earlier today. Oh my god. We now have This is insane. We now have an 88% chance of a 100 basis point hike. What the hell? That is nuts. 88% chance. That is that is interesting. So we have a lot of I'm just shocked honestly. A 100 basis point hike in July 27th. That's going to be very very interesting for the current economic conditions, right? What this establishes, right? Okay, they're going to fight inflation really hard, especially how it's climbing with the PPI data this morning as well. But realistically, like the soft landing, I don't know how that's even on the table at this point. So we'll see how that goes and what happens here. So far, futures took a beating on not only bank earnings, but this PPI data, the jobless claims. We're at a very, very important level right now. 3740 to 43 is a huge, huge area. That area has been bought up multiple times, rebid multiple times for multiple hundreds of points. If that gives up today, we are going to see a lot of sell. We're getting into the 3600s very, very quickly if that gives up. So we need to see this thing hold out. We have a huge level at 3763 to 65, right? We'll see if those guys shape that up. But if we start running above 63, 65, I think we can get a very similar attempted rally like we did yesterday, right? Yesterday, it was a BS bid the whole freaking day, right? The bid was crap. We noticed that. And let's see today what the bid looks like. I don't think they're going to hold this level for too long, but right now they're really trying to sustain that balance. So let's see what we get. We're going to keep some eyes on just general large cap, mega cap tech names as well. And unfortunately, no one could chat in the chat today on YouTube. I hope everyone has an amazing trading day, and we'll see you tomorrow for Friday. We'll wrap everything up with you, and we'll then see you next week. So thank you all, and chat soon. Happy trading. Check out our masterclass on our websites for futures and options. And if you want to chat with us, come to community.tradeproacademy.com.